Hey guys, Stock Saturday and the Trading212 offer is open again. If you want to sign up and get a free share worth up to £100, and I'll get a free share as well. So yeah, link in the description, and I'll stick it in a pinned comment as well. So a slightly green week. Portfolio's up about 3,000 overall. Some sort of standout movers there are Meta Platforms up just over 10%, and Vale up just over 10%. So doesn't show the FX impact here, but I'm actually green on that, including the FX impact now. So wasn't particularly good at timing the bottom on that at sort of $11-12, but yeah, sort of called it out as being a good buy down there at least, and that's come good again. Rio Tinto sort of almost in parallel with them, doing reasonably well. Looking at another company in the portfolio that I don't sort of highlight all that much, but is quite a big position, Broadcom. So sort of semiconductor company that sort of could best be described really as doing bits and pieces in the semiconductor space. So sort of your storage and systems chips for SSDs and that sort of thing. Radio antennas, RF antennas in your sort of phones, and yeah, obviously Apple is a sort of fairly big customer of theirs. Yeah, sort of bits and pieces, as I say, not sort of nothing exciting, not the sort of big main CPUs that you're sort of looking at Intels and AMDs for. These are sort of companies that tend to get forgotten about really, but are actually quite large. But they announced their earnings a little while ago, and yeah, all seems to be good. Revenue growing, net income growing. They're spending more of it on buybacks, as they sort of generally do, and a sort of fairly speedily growing dividend. Yeah, I had a reasonable look through here, and all seems good. And they're not seeming to be experiencing the sort of decline in projected earnings that other companies are. So, as I say, they are 219 billion, so bigger than Intel and AMD, and yeah, their sort of trend on their earnings is increasing. So, sort of current year earnings has been going up, and next year, interestingly, is going up. Where you're sort of Intels and AMDs and people like that have been dropping, and also on the sort of memory side, Micron and Samsung have been dropping. So yeah, good to see them sort of having, I guess, pricing power, or they don't have to drop their prices. People just carry on paying the same, or having a reasonable increase and having to pay it. Basically, there aren't exactly a huge amount of competition to Broadcom, from what I understand. Sort of, I believe Skyworks Solutions are sort of a bit of competition, but yeah, not exactly a huge market. So yeah, a sort of underloved, I guess, less talked about semiconductor company, 219 billion, and yeah, it's just been sort of doing really well. A little bit of a dip in the last couple of months, but it's sort of recovered most of that, and it's doing pretty well. So it's in where are we? Yeah, 21% in the green, and yeah, got a lot of dividends coming off them every quarter. So very happy with them. And I looked at Tencent before and sort of highlighted my bullishness on them, but most people sort of know I don't actually hold Tencent direct. I hold Prosus as a sort of a discounted version of Tencent. A lot of people see it as. It's not quite that, but yeah, that's how a lot of people see it. And they're sort of going on a cost cutting drive, looking to basically make their non Tencent investments profitable. So they do own quite a few companies outright rather than just sort of having stakes, and they've not been particularly profitable. So they are looking to lay off staff as inflation and rising interest rates have sort of eaten into growth projections. So people aren't quite as happy about sort of holding companies that are going to be growing and growing and sort of profitable in 5 years, say. So they're looking to try and cut costs and sort of turn a profit on their other businesses within 2 years, which would be rather nice, because I do think part of the sort of discount on the whole company and the sort of 10 cent at a discount basically comes from people not wanting to own their other businesses. So it's sort of largely in e-commerce and sort of food delivery and that sort of thing, but mostly in emerging markets. So I think people probably give it a fair discount sort of because of holding all of those. People don't really want to hold that. And they are also reducing their 10 cent position over time. It was sort of 31% originally, and they sort of dropped it down to 29%, selling off a bit of that and investing in other things. And yeah, I think they're going down to sort of 27 and sort of saying that they'll go even further. But it is obviously still a fairly large position in Tencent. 27% of them is very, very large and is more than the sort of process market cap. If you go onto the investor section and go on net asset value here, you can sort of get their calculations, which are sort of updated fairly regularly. Or the date here is sort of their value summary. Not sure how often they would be updating their smaller and sort of less liquid holdings, but they do sort of, I guess, track the 10 cent holding at least because that's public. And they're saying they've got $130 billion in businesses, 104 billion from publicly traded companies, and 26 billion from private companies. So some of these, as I say, they own outright, and some of them are stakes. So things like Udemy and some of the sort of food delivery stuff is stakes in businesses. Similar with the sort of classified sections, competition for eBay, I guess. And yeah, they have some cash, some debt. That sort of basically nets off to pretty much zero. And they give you this sort of net asset value per share in euros. So 94 euros total net asset value. And the shares are sort of up reasonably well at the moment, but are still at 62 euros. So you're basically getting the sort of 10 cent at less than the cost of 10 cent, and then all of the rest of this for free. So it doesn't always go that well. They've had to sort of sell off some stuff. They had investment in I believe, a Russian social media company. So that didn't go too well, and pretty much had to sort of write that off to zero. And yeah, some of these other holdings, as they say, are unprofitable, and they're looking to sort of cut costs on those and try and get to profitability in the next 2 years. And that may sort of close some of this discount. And they also think the sort of heavy amount of buybacks should close that discount. They're basically buying sort of 70 cents for a dollar every time they or no, they're buying a dollar for 70 cents every time they do a buyback. So they see that as good. A little bit of a shame to be just sort of selling 10 cent. Sometimes does cause the price to drop, and just doing buybacks with it, which is sort of essentially manipulation. But that's what we've got. So I carry on holding process rather than 10 cent direct. Quite like it as a sort of little emerging markets play as well as just my emerging markets ETF. So that's quite nice as well. And just looking at some of the news that's come out in the last week, quite a fair bit of news. We got some sort of UK lending data, which wasn't particularly good. That's October, not November, so could have even got worse since then. Sort of expected mortgage lending of 5 billion, just over 5 billion pounds, and it came in under 4 billion. So that's not particularly good. And sort of net lending, including other lending, was 2 billion under expectations. Was expected to be up from last month. So that was down quite a lot from last month. 1.8 billion. So that wasn't particularly good. The sort of US house price index came out. This is for September, so expect it has got a fair bit worse since then, but that was expected to be 1.2% down on the month, and it was up 0.1%. So a little bit better than expected, but that is September data, so take that with a pinch of salt. The provisional CPI data for the EU came out quite a bit lower than expected. Even the core monthly, which everyone sort of seems to look at because it excludes energy and food, was expected to be 0.6%, sort of similar to UK and US numbers for the last few months, and that was zero. So there you go. Even the headline was supposed to be a little bit less, 0.2%, and that was negative 0.1%. And the yearly slightly worse than, or slightly lower than expectations. So that's not too bad. Thursday we got the UK November house price index, which is a little bit more up to date. And yeah, last month it was minus 0.9% on the month. This month they were expecting it to be not quite as bad, 0.3%, but it was actually worse than last month, minus 1.4%. So that's two fairly large drops in a row for just 1 month, and the year on year has now come down to 4.4%. Still green, obviously. Price is up 4.4% from last year, but I do think that's sort of looking a little bit in the past. Looking at the annual figures, you sort of got two fairly negative months in a row at the moment. Winter isn't not generally the time to be buying houses, so you could see this get worse sort of in the next few months, but it be just sort of partly down to the winter, but worth considering certainly. And then Friday, the thing everyone seemed to sort of get excited about, although no one knows what to make of it these days, is non-farm payrolls. So jobs data for the US. That came in 263,000 jobs against 200,000 expected, and 284,000 more last month. But I mean, if it goes up, then people are expecting sort of harsher rate rises, but it means sort of strong for the economy and sort of a potential soft landing, as everyone's hoping. Inflation comes down, job unemployment doesn't rise particularly, and they can ease off the interest rates. That would be a soft landing. But worse than expected would have been sort of probably interest rate rises stopping altogether, I would have thought, if not maybe 0.5% more. And then, yeah, potential money printing. So people see that as sort of positive for the stock market and other sort of risk assets. So never really know what you're hoping for really these days with the payrolls, but it's always a very important number. Just getting back to the portfolio, so there wasn't a huge amount of movement. It had sort of a bit of a red for Micron. It's down quite a few percent. But yeah, not too many other sort of big moves. In the ISA side, Argo blockchain still practically going bust. Was up on the day on Friday, but is down sort of 23% for the week. So you just keep seeing that in these low down periods. Yeah, it's a very, very sort of small company on the brink of most likely going bust now, unless they can find a new investor. There was slight relief that the Bitcoin difficulty is sort of coming down as sort of some of the other miners are shutting down and going bust, and yeah, that sort of reduces cost at least, or raises profitability, not quite profitability, or sort of lessens the loss if you like. But yeah, they had a fairly down move. Vici are buying some more real estate off Blackstone from the looks of it, so That's interesting. Or buying out the other half of real estate that they already owned. Um, so that was good. So I should highlight the Chinese tech as well. Tencent sort of doing pretty well, so my process is up, and Alibaba and Baidu both sort of up about 20%. So very, very nice. Interesting. The sort of riots are potentially, I guess, they may sort of back down on the COVID restrictions and lockdowns, and people sort of seeing this riots as sort of not very good for the country, not very sort of doesn't look very good from the outside world. But if that sort of leads to an end of the restrictions or a sort of relaxing of them, then I guess you'd see it as positive for the tech companies. So riots mean 20% in price increase. Very interesting. So yeah, let me know how you guys' portfolio's doing, and like and subscribe. See you soon.